Welcome to RFI's Banking Uncovered, the podcast going behind the industry PR, the media spin, the product awards, and the investor reports to look at what's really going on in the customer data, and to ask global thought leaders about their thoughts and views on the future of banking and payments. Hi, I'm Chloe James, and welcome to this very special episode of Banking Uncovered, the second part in a two-part conversation with none other than Jim Marous. In part one, you'll remember my co-host Charles Green covered off switching, digital, AI, and the age of fintechs and how long they've been around. There was just so much to say that we decided to make it a two-part series. I'm going to cover off with Jim customer experience, engagement, brand, and innovation, which are topics that I'm really passionate about myself as well. Jim is one of the most sought-after keynote speakers in the industry for industry and corporate events. He speaks to hundreds of thousands of people all over the world every year. He's been rated as the top 5 most influential people in banking globally, and that's for 10 years straight. He's known for his understanding of disruption when it comes to the banking industry. He's a former banker himself, co-publisher of the Financial Brand and creator and host of the Banking Transformed podcast. On a personal note, Jim is a great friend of mine. We've been friends for over 10 years. He's a fabulous mentor as a person and as someone working in the industry. And I hope you really enjoy this chat between Jim and myself.
Chloe, it's, as you know, it's a pleasure. We don't get together enough, and even if it's on video, we don't get to talk as much as we did. For anybody who doesn't know how this whole thing comes about, we spent the last half an hour just discussing and getting updated on each other's lives before the podcast started. But I have similar high aspirations for what Chloe has done in the industry. We, as she said, we go way back, and it's great to be on our show today.
Thank you. Well, thanks for being here. You've got such an influential voice in the industry, and we all know that. I should just preface this. Obviously, this is a global podcast. I'm speaking to you from Australia, which won't shock you by my accent. I get told that all the time. Jim's obviously over in the US. We were talking about temperature differences. It's 30 degrees in Adelaide today. He says it's in those single digits over in Cleveland. So very much a global perspective here. But listen, we're going to talk a lot about the US in this podcast. So US customer satisfaction with their bank, dissatisfaction, and why. I really want to talk to Jim about how US consumers are really feeling about their banking and finances overall, especially when it comes to cost of living crisis and so much going on in the world at the moment. Politically, in the US, there's a huge piece. The fintech debate, he's obviously a huge voice in the fintech scene, but very understanding of that traditional banking background and how those are aligning. We're deep into the fintech scene now, 15, 20 years. So just want to get his take on that. I also really will be gleaning Jim's thoughts on customer experience. He's huge in brand and marketing and customer experience and understands it all. So Jim, I just wanted to kick off with a couple of stats from RFI here. Recently, we're seeing the banking landscape in the US is going under very significant change, right? In this market, the average relationship with the primary bank is 16.6 years, and over 2/3 of households established their banking relationship over 2 decades ago. But 25% of households in the US now, if they're not just thinking about switching their primary bank, they're actively looking. So I just really want to gather your thoughts with that in mind. When it comes to satisfaction and dissatisfaction of US consumers, what are you seeing, hearing, reading? Where do you see it?
There's so many things to uncover there, Chloe, and you brought up a good point that if nothing else, the relationships are being fragmented. And as we're seeing the same research that you've seen, at one point, we have very long-term relationships with the majority of consumers have been with the same bank for a long time and continue with that financial institution, be it a bank or a credit union. The difference is now is there's a lot of silent attrition. And what I mean by that is, as opposed to having a primary relationship where all additional relationships are with the primary institution, the consumer now is making choices on an ongoing basis as to who else they want to have a relationship with to fill out their personal open banking relationship.
Do you see a world where perhaps things change so much that there's no longer that main financial institution that takes basically your salary. That's one of the biggest pieces, right? The deposit taking salary.
Yep.
And then the other big piece is the mortgage. It's the home loan, essentially, like in a lot of countries around the world. Do you see a time when that completely becomes, you know, a digital only relationship with a non-traditional provider, with this next generation who isn't perhaps wedded to the, you know, traditional provider, even though we know that's often where the trust lies for people like me, for example, and my age group? But let's talk about age groups, you know, further back.
Right. I think it's definitely true. The wedded to, the term you use, wedded to, I think that's already gone.
Right.
I'm not wedded to my primary consumer bank or my primary business bank. I have it, and it's too cumbersome to close. So it gets weakened on a day in, day out basis as I open other relationships with other
But you're still
financial
wedded to
providers.
it you are still wedded to it in that aspect, even though it's because it's too cumbersome to change, but that's still a wed of sorts.
It is in that I still have those relationships, but
Yeah.
they're not making the revenue they used to do
Yeah.
because I'm not doing any transactions with them. My
Yeah.
transactions are outside of those relationships in most cases. In fact, if financial institutions today analyze their inflows and outflows of funds and where those funds are going, they'd be frightened to death because they'd see that on a monthly basis, this consumer or business is transferring funds to other organizations. You know, we talk about open banking where all these organizations come together and provide an embedded experience. The reality is it's already there, but it's not being built by the financial institution as we originally thought. It's being built by the consumer. It takes me about 2 minutes, maybe 3 minutes to open a brand new relationship on a digital platform relationship. In the financial institution, traditional financial institution, 70 to 80% of these organizations still take 15 minutes to open up a new account. Nobody has that kind of time or patience to do that on a mobile device.
Especially a generation so used to now an immediacy in every single thing that they do.
Exactly. And on top of that, we're making the relationships now based more on the engagement. I'm not going to call it experience because experiences now are so close because, okay, in the traditional bank may have a higher level of trust, but the digital bank's going to have a better opening experience, going to have more intelligence. I think right now, what organizations are looking for, be them fintechs or traditional banks, is engagement. How much are you going to be able to help me know what I should do tomorrow or right the next minute based on what you know about me? There is so much data out there that a consumer is expecting you to provide, and I use this often in podcasts I do and in presentations. They expect a GPS of financial services. They expect you, the financial institution, to actually help me get to my destination, my financial goals, without my involvement. I want
Just
you to
by
know
just
me.
by the data they can gather on your behavior and
Exactly.
activity. Yeah.
And what I'm doing, exactly. I expect my financial institution relations to know me, understand me, and reward me. Now, what's interesting is a fintech like Acorns or PayPal does it already. Acorns knows how much they can take out of my account and when they should take it out and what I'm trying to achieve. PayPal, even more importantly, knows how I get my money, how I disperse my money. Because of that, they offer me pre-approved credit offers that my traditional financial institution would not be able to offer me because they know nothing about me. But PayPal says, you know what, we're going to give you ease of access. Just push this button here in an engagement platform, and we'll give you this money today based on your needs. Right now, organizations and consumers are looking to build a relationship that's going to help me do banking better.
Yeah.
And as a consumer, it's been made more and more simple to find those partners that I want based on my current needs. If I want a student loan, if I want to pay off a car loan, if I want somebody just to help me manage my budget, these organizations are getting better and better at knowing me so they can provide services that won't just take me north, but will take me to my specific destination I want to go to, avoiding all the pitfalls and taking advantage of all the shortcuts.
And is that something that you see the disruptors do better than the more traditional providers? And is that your advice to traditional providers, to be in that tailored, offering the experience? And I love this experience versus engagement. I haven't heard that before. I want to come on to that in a minute.
Well, it's activity. I mean, you look at what organizations want. They don't just want it's like a restaurant. A good experience is what I expect. It's how much do you engage with me? What does that engagement feel like at the restaurant? Well, it's the same thing with banking. Now, what's interesting is banks of all sizes today have an opportunity they've never had before, which is to partner with fintechs to bring the level of engagement, the level of experience that are provided by fintechs directly right now. So there's no reason why I can't build a regular savings plan with a traditional financial institution if they are willing to let go of some of the things they have always done to build partnerships with organizations that are new out there. That are going to make it so you can open an account in 3 minutes. Now, the challenge is, will the financial institution let go of the way they've thought of things in the past to build a better engagement platform than they ever had? What our research has shown is the organizations that currently are able to do this are the smallest and the largest. The largest because they have the money, the smallest because they are partnering with organizations that can, and I'm going to use the example of opening an account in 3 minutes or less, which we think is a trigger point for whether or not you're going to disengage or not. What is interesting, though, is the smaller financial institutions don't get in their own way. If a mid-sized organization partner with an organization that proves that they can open your account in 3 minutes, what happens is they get together on their first meeting after they've signed the paperwork, and the financial institution will say something like, we want everything you have on your platform. However, we're going to still require this physical ID to open the account for Know Your Customer. Yeah. Immediately, the partner organization that said they could bring a 3-minute opening process realizes you've just tripled that amount of time because of your requirements that you won't let go of from the legacy organization.
But aren't those requirements sometimes necessary for, I don't want to add time to the, let's say it's the opening the account, but identity is important. So what's the solution there then to make sure the identity is verified and therefore it's a secure activity?
So David Birch really well.
Yeah, cool. Yeah, I've had David on the podcast. Yeah.
Right. He will tell you that I can build a better Know Your Customer identity platform digitally than I ever could through a physical platform. It's like saying, oh, I want to have the physical plastics to make my credit card purchase. I know for a fact, you know for a fact, that what I do with my facial ID on my mobile device is going to be a better payment platform than plastics. We just don't let go of the old things. So regulatory requirements globally say you need to have Know Your Customer and you need to know who it is. They don't tell you the specifics as to how you need to do it. I don't know of any country that says you must use the physical passport or you must use a driver's license. They simply say you've got to take caution to know your customer. We can do that better digitally. I mean, in China, they know their customers simply by the way they use their mobile device and where they are at different points. They can bring the customer to the device simply by knowing how they transacted in the past. So again, we've got to rethink that, and we're seeing the smallest and the biggest organizations doing a really good job of rethinking what banking can be. Yeah. We're seeing amazing ability to be just like one of the digital leaders. If you're a small financial institution that's willing to have leadership that says, I'm willing to do things differently than I've ever done them, and to put my whole team on visioning what the future will be. And what's amazing is what we remembered in the past as being something that working with a partner would take a year to 2 years to implement things. They're doing these things in a month, 2 months, maybe 3 months. Speed and simplicity and scalability is possible. We have amazing providers right now that can partner with financial institutions. The problem is financial institutions don't want to get out of their own way.
Do you know what's so interesting? We think of, you and I mentioned at the top of the podcast, we go back sort of 10 or so years, and I think of all of the different sort of conferences and events and podcasts we've been on. And I love how you're bringing this point about some amazing providers out there. And you know what? They're not new anymore. I'm thinking of, TransferWise now, Wise, for example, or Klarna or Afterpay, or, I'm giving obviously some examples of BNPL, but they're not new anymore. These are, they're 10-year-old companies. They have, worn the path. They've faced backlash. They're coming under regulatory guidelines as well. So you're not actually dealing with a brand new sort of jumbled together startup anymore. If you're a big financial institution, you're dealing with legitimate, corporate, very well governed organizations, which I think is a really good point to make there. I want to jump into a little bit on this customer experience and the engagement piece, because I want to ask you about CX with a little bit of RFI data in here showing that in the US banks, it's all around customer support and customer experience, right? That in the US banks that offer customer support in a very superior way, facilitated through digital channels like chatbots, for example, this is really retaining customers. This is a critical factor in why someone will choose to bank with a certain provider. What do you feel that banks can do to really stand out in that CX space? But I want to add into that customer engagement space. How can you stand out?
They're married. Okay, so I will say that experience now, the variance between institution A and institution B is not nearly as wide as it used to be, because digital kind of is like the grand equalizer in that your ability to do a banking transaction, find your balance, do all that is just pretty much the same from institution to institution, almost too much so that they all tend to look alike. I can open up 3 different bank accounts on my mobile device, and if I didn't know the colors of the brand, if I didn't know anything else, the way they present, the way they deliver is all the same. However, the difference is now going to become, how much do you engage me? How much do I become reliant on your app? For instance, I go back to my Acorns account. On a regular basis, they tell me how they're investing my money. On a regular basis, they give me opportunities to find different ways to take money out of my traditional account and put it into a savings account. They also reach out to me and say, oh, by the way, if you'll introduce us to 4 other people, we'll give you what I consider to be a pretty hefty reward. And what they do is they continually are communicating to say, we're here, we're here, we're here. That's engagement.
That's the communication is a really important point. That's great.
Well, and I'm going to go back to the GPS system on your car. It's one thing to tell me the directions to where I'm going. It's another thing to have engagement to say, look at that red line on that road. That means there's a backup. And you provide me an alternative route that I would have never known about, because it's in the middle of a place I'm never familiar with. I wouldn't know when to turn left or when to turn right. It helps me. Now, in one sense, the experience is great because it gets me from point A to point B, even if you had the traffic jam and did nothing else. It's when you take that step further and take the crowdsourcing information to say, there's a speed trap 3 miles down the road that you want to slow down a little bit. Oh, by the way, these people have said there's a major crash ahead. That's engagement, because what they're doing is they're making it indispensable, and they'll proactively interact with you. For instance, when you've gone to your local coffee shop, as soon as you get back in your car, it tells you how's the traffic to get back to your home. It knows that usually when you've left that place, you're going to be going.
You go home. Oh, okay, yeah. It's a very fine line, I think, or perhaps a little bit of a fine line, gray area between fabulous engagement and being intrusive. Now you're very responsive. Do you think that there are others out there who think, I didn't ask you to tell me what I would like for dinner tonight? Like, where's the fine line there?
Value.
Okay,
And the reason I say that in a very simplistic way
great.
is I look at Amazon Prime. That's US more strong in the US than anywhere else in the world. But
Yeah.
I asked people in the room, when Amazon raised their Amazon Prime cost last January, how many of you considered closing your relationship?
Not
I
me.
may get, I may get about between 2 and 5% raise their hand.
Yeah.
I
Yeah.
asked, how many of you actually closed it? Half of them at least dropped
Yeah.
their hand.
Yeah.
I then asked all the others, because basically everybody has Amazon Prime.
Yeah.
Extra value do you get from having Amazon Prime as opposed to not having Amazon Prime? And really nobody can answer that, because you can get delivery the next day even if you don't have Prime. You get it sometimes without it. You can get movies, but not many people even access the other options you have with Amazon. The reason people are willing to pay that is because Amazon has always managed my data extraordinarily well. I've never felt like I was at risk. In addition, every time I go to Amazon and ask for something in the search column, it's getting better and better, as Google has in the past, and making it
Yeah.
so my first four choices are probably going to be. I'm not going to even have to scan the screen on my mobile device to look at it anymore, because the first four are going to be the ones that most people buy, the ones that are highest rated, the ones that are in my color. As you well know, I'm not going to get many options of people offer me green, pink, and light blue. They're going to offer me black and red.
You're going to get a lot of red, aren't you, Jim? Yeah.
And it's the fear of missing out. So what it is
Yeah.
these organizations have built such a strong loyalty through the engagement, through giving me continuous reinforcement as to why I do this. I get not pharmaceuticals, but I get regular medicine like acetaminophen, my Tylenol, whatever it is,
Yeah.
from Amazon Prime. I'm too
Right.
lazy to get in my car, and I realize I may be paying a little bit more, but that convenience factor for
And
my
it's very,
time.
very convenient. Yeah. Yeah.
And
Yeah.
again, what have they done? They've made it so I go to Amazon 4 times a week. My wife,
And
even more.
And I think it's
And
quite interesting. I think trust, you obviously, because of these relationships and because of your relationship with Amazon and because of the value they provide you, you
Yep.
trust them.
Yep. And so what happens is, getting back to banking, my
Yeah.
traditional bank, I trust them. They've been decent.
Yeah.
I'm not so dissatisfied that I want to close the account. However, where am I happiest? I've already mentioned, I'm happier with PayPal.
With
I'm
PayPal,
happier with SoFi. I'm happier with Robinhood. I'm happier with Acorns.
yeah.
Why?
Even just the
They
way you speak
seem
about them. Yeah.
they're looking out for me.
They're looking
Yeah.
out for you. They're offering you value. It's tailored. It's for Jim. It's not
Yeah.
just for the person in this bracket or this bucket of people. It's specifically for you.
It's interesting, Chloe. It's a test and learn situation. So Disney I think they still do. They give the wristbands to the family and it identifies who they are, but they use it for tracking. Well, they also in the past, I don't know if they still do this, they use it for talking characters to come up to your children and talk to them by their name, because in their earpieces they get told this is your child named X, Y, or Z, and they go up to them and they go, "How are you enjoying your time at the park, Johnny?" And all of a sudden the parents are freaked out
Yeah.
until they look at Johnny's face and realize, I don't care what Disney knows about me. They have just made my child's day, week,
Right.
month, life, because Snow White talked to him or her. And the
Yeah.
reality is, it's you may be uncomfortable initially, but as soon as that value is actually delivered, where you
Yeah.
realize they're not just capturing information for the sake of capturing information, but they're actually going to use it for my benefit, that's the partnership I'm looking for.
Absolutely. That's a really great example, the Disney example. And I think there has to be a balance between
I
this
agree.
value and tailorization, or just the tailored experience, value, engagement, and then layered with the security and the trust. Like you said, it's a marriage. Well, it's a good marriage. If it's a good marriage, it's good. I
Well,
think
and also consumers are becoming more and more intelligent in the fact that they know that they can't beat the system. In other words, they realize your grocery store keeps track of everything they buy, every trip they make. They understand that AI knows everything about me. So they can, excuse me, bitch and moan all they want about, oh, I don't want my X, Y, or Z organization to know anything about me. Guess what? They know they do. And so you might as well I will go out of my way to give information that's not personal, but I'll give as much information so they can treat me better. That's why you say yes to a lot of the things that Amazon asks about, or why your GPS system, your car can continually tell you everything about what they know about, or why your car itself is going to tell you what you need to do, or that you're not driving well. I mean, there's been times I've been a little sleepy and I'm maybe shifting between the lines. My car tells me time for a coffee. You need to
Oh,
get off the road. You're not driving safely. Now that may piss me off a little bit. At
mm.
the end of the day, I'm going, okay, thank you. I don't like
But
that
you know what? That's
information
actually
thing.
good for you. And then you could actually marry that in, and that's amazing for the insurance sector.
Oh, you're exactly right.
You know,
You're
like that's a really clever,
yeah,
this can
integration.
help the greater good. I interviewed on Banking Uncovered a couple of weeks ago. I interviewed the CEO of REA, which is one of the top Australian insurers. Actually, they had won a whole suite of awards for exactly this piece. And she was talking about what was so important to them was, you know, they're customer owned, absolutely customer owned and member based. But it also is the care factor about those members. So it's obviously keeping their insurance
Yep.
premiums down, but also the care factor of their members and marrying those together. I want to talk to you a little bit more about brand and marketing, just because I know you obviously work so strongly in that space. You advise many, many banks and other companies when it comes to sort of brand and marketing. How do you think it's sort of playing out at the moment within the financial services sector? How much needs to be actively done, or is a lot of it, you know, the word of mouth, the experience that you speak about?
I think word of mouth is playing more and more of a role. And I'm talking about word of mouth in the broader sense, social media,
Yeah,
things that you see. Great example is my son, and it's a combination of elements. So my son has had a relationship and he was about to open up another banking relationship, but he's married to a person who has a very mobile job. He's a remote person to begin with, but she actually has to move from location to location. They just got married. They were going to open up an account. He said, Dad, is there any reason why I should not open an account with Chase Bank? And Chase Bank being the top bank in the US right
yeah,
now, as far as number of branches and everything else, I said, actually, that's the best decision you can make. Because if you want to have a organization that if you have a problem, you want still to visit a person, to go into a branch, to know things are secure and everything else,
great
Chase Bank
example.
is not a bad solution. Now,
Yeah,
I could get really technical with them and say any bank's going to be the same because it no longer matters where your branch is, where the people are. You can get engaged through the mobile device. But the reality is he wants the security of knowing he doesn't have to worry about that element of his life. And for him, in knowing him, that was the best decision. For me, I don't know where my auxiliary account relationships are based. I don't know where PayPal's based. I don't know where I do know where SoFi's based, but that's only because I've talked to them enough. And Wells Fargo, I'm not too sure if I'm working with a Charlotte-based Wells Fargo or the San Francisco-based Wells Fargo. The organization itself doesn't matter. For him, being new in his relationship and new in his marriage and them mobile, it makes a difference. So it's very interesting. And the branding, it's getting tougher and tougher. I think a lot of the branding now is what you're showing me on my mobile device.
mm,
I want an organization that continually makes it easier for me to make decisions. I continually talk to organizations and go, why is it that you don't have an ongoing band on my mobile banking device that says you have this much money available in a open line of credit if you need it?
mm,
Giving me the security factor of saying, if I have an overdraft, if I need to buy something, I don't have enough money in my account, I can access that in an instant. Doesn't matter what the amount is. Now in the US, unfortunately, we have organizations that continue to adjudicate credit with the thought of $1,000, $2,500, $5,000 lines. That's not what we're talking about. You
yeah,
could offer a brand new customer that showed you their rental receipts or their mortgage payments. You could offer them $200 in a line of credit, secure them pretty much for life, give them a tool that says, I have a comfort that I'm not going to have something go wrong. And
mhm,
at the same time, build a relationship.
Yeah,
That's a branding play. On the other
yeah,
hand, we have an organization in the States, PNC Bank, which is one of my banks. And I always thought that they were slower to the digital game. They were hard to work with partners, but they were very risk-free. You never had to worry about something going wrong with them. That was a good and bad news. Their brand is that they're brilliantly boring, which was hilarious to me because I said, you probably nailed that brand better than any brand it's about as truthful as you could get. But
yeah,
that's marketing to a base that says, I don't need all the digital, bells and whistles. I
yeah,
just want to know my money is safe and you're looking out for me.
exactly.
That's
Yeah,
pretty good branding. It's not necessarily the way I would have gone about it. And I give a lot of credit to whatever ad agency got into the bank and the person who actually said, we'll do it. We'll try it. Because
yeah.
it's exactly what that organization is.
Want to finish on a final bit of RFI data that I think will really connect with you and resonate with you, Jim. It's around this recurring theme of switching one way or another. It's about a bank's ability to deliver meaningful innovation and technological advancements to its customers. When it comes to meaningful innovation today, so we're at the end of 2024, what is standing out to you? We can either look in the US, or I know you've got some fabulous global examples when it comes to it being really, really meaningful. Is it that personalization piece?
It is. And personalization beyond segmentation, beyond what you're used to seeing. COVID and the financial crisis globally has taught us that we really want to have somebody that's in our court that really knows us, that really understands where we're trying to get and understands the blockages in the way that are completely unique to me, as opposed to being part of a segment. An example, when the government distributed COVID checks to almost everybody globally to help them through the rough times,
Yeah.
savings rates went up globally because people put them into their accounts. However, we never went further to find out what happened next. You had some people that needed those checks to put food on their table. You had others that needed those checks to make payments or to waive payments on a credit card or a car loan or a house loan. You had other people that did not have those challenges and simply increase their reserve savings account. How much did financial institutions really understand what way they went? How did they use their checks? Which really would have told us so much about what stage of life people are in. I mean, you know me, I'm an old man in a young person's game. I have a relatively young son at 26 years old.
And young at heart, might I say, Jim. I think you're young at heart.
Well, okay, we'll go with that. But we had our first child at an older age than you are today. And the reality is our financial needs are different than most people in our traditional demographic segment.
Right.
We're sitting here with 2 mortgages. We're sitting here looking at in the last 2 years, how do we fund the wedding that we just provided our sons and daughter-in-laws?
Which I've seen the photos, and it was a fabulous wedding.
It was, yeah, we amped it up. But the interesting part is, I want, as a consumer, innovation that's going to help me download some of the things I just don't understand. The business world, AI, banking, financial wellness, all these things are different. Now, I also have some affinities. I have things I believe in. I have things I'd like to contribute to. How much do you know about those financial institutions? How much can you personalize how I leverage my relationship in a way that you say, you know what, we're extraordinarily conscious about climate change. Do I make my decision based on that? Or we give to these organizations, or we don't give to these organizations. It's going to get more and more fine-tuned because all this stuff is digitized now. Yeah. We're getting lazy if we simply look at age, income, and wealth, the wealth of an individual. you've got to know me better. And the consumer is more aware than anybody that it's not about you having to take a file folder out of the drawers and learn about me right now. You can provide this to every single consumer, no matter what level of income they have, no matter how much revenue they generate for you. I mean, I was at WeBank before COVID, and they have millions upon millions of consumers that use their services. But many of them are simply to buy a mobile device. They have the credit on the mobile device, but they are able to look at the mobile device and determine if they were a good financial risk immediately. But since they have so many millions of customers, they only had to earn $2 a year or $5 a year on that relationship to give them a great experience. So it's interesting because I believe, yes, there'll be those whiz bang things. There'll be things like, I mean, I'm still amazed by those big bang innovations. I take it out of banking, but I don't know if you've seen the SpaceX rocket that went off 3 days ago. And now it's off from a tower, but then landed the booster on the exact same tower, and two what they call chopsticks came and grasped it and put it back. I'm sorry. I go back to the days of Apollo when you had, or Gemini, which you had a simple capsule with nobody in it going around the Earth once or twice, and they said, that's amazing. What is the next level of innovation in banking? I think a couple of things have to be done. Number one, an organization has to listen to their customers. They have to seek out information, because if you show you're going to do something good with it, the consumer will share things that you would never imagine they'd share because they trust you. Secondly, you got to make it scalable. So you got to do it for Chloe and you got to do it for me differently based on how I wake up in the morning. And thirdly, beyond simply listening and personalizing, you need to involve the entire organization as listening devices to what's wrong. We do not, as an industry, listen to the people that know more about what we're doing wrong today than anybody else, and that's our employees. We need to democratize the innovation process in the truest way to say, how can we do banking better? What have you heard lately? And these people will share, but they're never usually asked. And so we continue to do things the old-fashioned way. And I kid about the fact that in a management training program today, still, financial institutions bring people out of university and they say, we want you to do rotation. We want you to see how we do things. What a demotivator. Why don't we say, hey, we'd like you to visit this area of the bank and this area of the bank, because I think they could benefit from what you've just learned in university.
Yeah, and what would you teach them?
What would you do differently?
Amazing. That's
And
such
instead,
flipping it totally on its head.
Oh, exactly. And AI, you know, I credit myself with wanting to be a continuous learner. Generative AI can allow you to do that, but how many people will be trained within the organization on how to be good prompt specialists, how to ask the right questions as opposed to developing the right answers? In my mind, that's the ultimate of innovation, because a lot of the big stuff we've done, we haven't crossed the T's and dotted the I's. We have not perfected the personalization aspect, which brings it back to the very beginning of our discussion. It's what moves it from experience to engagement. It's what increases the ability to possibly keep more of the relationship under one roof, because you're going to fill out those things that I'm looking elsewhere for. And you better, as people say, what do I do first? You better fix your front door and your back door. And what I mean by that is make it easier than ever to open a relationship, and make it most impactfully learn more and more about the people that leave to find out what you're doing wrong.
Such great advice. I love that. I love the advice on asking the newer people in the organization, the grads coming out who have been learning, who have grown up in a completely digital world, and the way that a young mind thinks when it hasn't been pushed into a box. And I love that. Like, this is the, you need to learn, this is the way that we do things here. Whereas flip that on its head, what can you teach us about the way that we do things here? I know that there are some great, some of great organizations, and I am speaking in banking here. I've spoken to a leader before who they had a program within the business, and basically, you know, you often have a mentor, right? You have a more senior mentor when you join an organization, you're younger, and they had a reverse of that. And they had some grads who were sort of mentors to some of the senior executives, and some of the learnings that came out were just
And we need to do it
unbelievable.
because the reality now, if I graduated from university as a finance and marketing major, as I did, my skill sets, my learnings are going to be worth so much less in 4 years than they are today
Yeah,
because
things change.
the marketplace is changing so much. I tell people,
Yeah,
I said, unless you make learning part of the ongoing process, unless you really push that within an organization and really encourage people to test and learn and to take risks and to
yeah,
allow them to think outside the box. But if you don't do that, by the time rotation's over with, you've not only killed most of the enthusiasm, you may have lost the employee. And if you
yeah,
kept them, they probably are no longer incented to continue to think.
absolutely. Jim, thank you for your time. I'm so grateful. I loved the chat. I knew that we would just have a fabulous chat. I can't thank you enough. Where are we going to see you next? What's happening next?
Still traveling globally, speaking at events, speaking at financial institutions. Again, I think more than anything, I'm trying to give common sense solutions to difficult problems. I think we as an industry overthink the process. And the one thing I'd leave all of your listeners with is it starts at the top. If your leadership, be you the leader or somebody else the leader, if you do not embrace change, if you're not willing to do things differently than you have in the past, leveraging your experiences, you will be behind the curve. Because the reality is the marketplace is changing. The people that are willing to build partnerships with collaborative solution providers that can make it so that you can act and feel like a fintech with very minimal investment at a step at a time and doing it very quickly. The more you wait, the further behind you are, and playing catch up is not going to be possible anymore. I had a boss once that said, the train's leaving the station. If you're not on it, you're off it. And I think that's so valuable today that embrace the ability to learn. Why are you doing this podcast, Chloe? Because it's a learning experience. That's why I do podcasts on either side of the mic, because it's my best learning tool to find out how do we stay ahead of the marketplace and listen to what's going on, because the status quo is where 75% of the marketplace is. Pay attention to those outliers that are doing things differently.
Totally. All right. Watch the outliers, get on the train, keep learning, open your eyes and your ears, connect with people, network, have conversations. And that's when the ideas will come. Thank you, Jim, Marous, on Banking Uncovered today. We'll see you soon.
Thank you, Chloe. Appreciate it.